our top trade this hour, dollar destruction. The greenback's gains unsettling markets around the world. Stocks down big, currencies getting hammered. Are the worries about Turkey and contagion about to get even worse, or are they overdone? Here to debate that, Josh Brown, John and Pete Najarian, and Kerry Firestone's here, the CEO of Aureus Asset Management as well. Let's begin with the markets where we started. Stocks sharply lower. It is the currency markets where the big story remains. The dollar moving higher against many emerging market currencies, several moving to multi-year lows. Josh, how closely are you watching this? The VIX highest since July 2nd, worst week for stocks in 7.
Yeah, well, so let's put it into context, though. We have not had a down 1% day in the S&P since June 25th. And then you combine it with the Turkey headline news, and it probably makes it feel worse than it is. It's really not a major flare-up, and that VIX being high, let's contextualize high. It's at 15. When you look at individual indices, you don't really see a ton of damage. You look at sectors, you don't see a ton of damage. The damage is exactly where you would expect to see it in the emerging market stocks. Here in the U.S., maybe the worst thing that we're seeing is semis, and they're only off 2.5%. Bigger picture, though, consumer staples are flat. REITs are up. Utilities are at the highest level they've traded at since December of 2017. So a diversified portfolio today is doing just fine, and that is what I think a majority of Americans have.
Kerry, emerging markets in a bear market. How concerned are you?
Well, the emerging markets, as you say, have been terrible. They have vastly underperformed the U.S. and even Europe. And I think they're oversold right now. If this further decline is all about Turkey, perhaps, and fears about the dollar and the debt that these countries have, I think it's overplayed. And I think some of these countries and stock markets are very attractive.
You're not concerned at all if the dollar continues to rise? I mean, you look at what the industrial stocks are doing. They're in a bear market. I mean, some of these names. Now, we know about GE's issues. Down 50+% from their 52-week highs. American Airlines, Arconic, Cummins, there are other names, Caterpillar, all down at least 25% from their 52-week highs.
Exactly, but they were all, again, part of the Trump trade. They moved from late 16 through into 17, and some of them had very strong multiple expansion in through 2017. So I don't feel that this suggests that we are into a new bear market because of this recent move. I just don't think you can
Pete, how do you view it? I mean, Santelli earlier was suggesting, and I think it sounds right, the way the markets are reacting, that the dollar index is now the barometer for the stock market.
It is. Yeah, it sure feels that way, doesn't it? I mean, so we had the down day on Monday. We had this nice up day on Tuesday, and now here we are getting pushed down once again. But one thing that's been the theme of what we've seen so far, at least this week, is really low volume. If you look at the volume on Monday and Tuesday, Monday, it was off 3 million from the run rate of what we've seen in the options world. Scott, it's off 5 million yesterday. We'll see how the volumes are today. But the one area we are actually seeing volume is people are buying puts out in the EEM. People are buying puts out in the FXI. That's telling me a little bit something about there's less worry here in the United States. Yes, I know we're down today. We're down 250 points, 270 points. Yes, we're down today. But the concerns, it seems to me, are in the rest of the world, but particularly some of these emerging markets. And I'd say China.
You're down like 4 of 5 or 5 of 6, whatever the exact number is, but you get the point. I mean, it is more unsettled than just.
Well, and we talked about this period of time that we're in right now, and you and I were talking about this just the other day. This period of time we're in where we've gotten through so much of the earnings cycle that now, as you're sitting here just sort of waiting for catalysts, I still think, and my view would be, Mike Wilson's been great, by the way, Morgan Stanley, he's talked about this for a while. At some point, we'll get a pullback that might turn into a correction of 10%. He didn't say it's happening today. He didn't say it's happening this week. He just said over this period of 6 or 8 weeks, expect to see maybe some sort of a pullback or maybe even a correction. He's been right about that. But then he said that won't last long, and then you've got to buy.
Doc?
Well, the one at a 10-year low, Judge, from high to low for the FXI, it's made about a 26% move. We showed on the screen earlier, year to date, which is correct, about 17%. But it did rally, the FXI did, to about, I believe, 53, pulls back to 40 now. You take a look at South Africa. All of these emerging markets, to Kerry's point, under extreme stress. Pete saying there's a lot of put buying there. He's absolutely right. Josh brought up VIX. The call buying in VIX, when Pete pounded the table for it a week ago, when it was under 11, the call buying in the VIX was extreme. They were buying the 13s, the 14s, the 15 calls. As we trade to the upside in the VIX, 25% move today, we see those calls more than doubling. I would expect to see some of these guys liquidating some of that here, Judge. And what I'm already seeing is next week, there's a lot of put buying in the VIX. In other words, they think this is a spike, as Josh said again, top of the show. Not really a huge spike, even though it's 25% move, just a spike to 15, and they expect it to pull back into the low teens next week, expiring a week from today.